Hello everyone, we're Group 3 and this is our final project. We have decided to use Berkshire Hathaway for our management strategies and investment portfolio analysis. Before we begin, here is our table of contents. This is just an outline of what we're going to discuss in the presentation, and you can see here we have various topics to discuss. To start our presentation, we will begin by introducing Berkshire Hathaway. What is Berkshire Hathaway? Berkshire Hathaway, headquartered in Omaha, Nebraska, is a multinational conglomerate holding company, meaning it owns and operates a diverse array of businesses across various industries. These industries range from insurance and utilities to manufacturing, transportation, retail, and to finance. Berkshire famously has notable companies like Geico, BNSF Railway, Coca-Cola, Apple, Kraft Heinz, and American Express within its portfolio. At the helm of Berkshire Hathaway are two legendary figures, Warren Buffett and the late Charlie Munger. Warren Buffett, often referred to as the Oracle of Omaha, serves as the chairman and CEO, while Charlie Munger was the vice chairman until his passing. Their leadership and investment philosophies have shaped Berkshire Hathaway into what it is today. A brief history of Berkshire Hathaway. Berkshire Hathaway traces its roots back to two Massachusetts textile companies, Hathaway Manufacturing Company established in 1888 and Berkshire Cotton Manufacturing Company founded in 1889. In 1929, Berkshire Cotton was renamed Berkshire Fine Spinning Associates before merging with Hathaway in 1955, leading to the formation of Berkshire Hathaway Inc. However, it wasn't until 1962 that Berkshire Hathaway began to take its modern shape. Warren Buffett's investment partnership, Buffett Partnership Limited, started acquiring shares of Berkshire Hathaway at $7.50 per share. As Berkshire Hathaway encountered financial difficulties and plant closures, Buffett seized the opportunity to aggressively purchase more stocks, eventually gaining control of the company in 1965. This pivotal moment marked the transformation of Berkshire Hathaway under Buffett's leadership into the renowned conglomerate we know today. The leaders of the company. Buffett and Munger are not just corporate leaders. They are revered as two of the most successful investors of all time. Their names have practically become synonymous with investing wisdom and long-term success. Their leadership at Berkshire Hathaway has been instrumental in shaping not only the company's culture, but also its investment strategy. Their approach prioritizes long-term value creation over short-term gains, a philosophy that has become ingrained in Berkshire Hathaway's DNA. Since the two have joined forces, the company's revenue has soared from $21.7 billion in 1990 to over $400 billion in recent years. This exponential growth is a testament to their strategic vision and ability to identify and capitalize on lucrative opportunities. Beyond Berkshire Hathaway, Buffett and Munger's influence extends far and wide. Their investment philosophies have inspired countless investors and business leaders worldwide, and their wisdom will continue to guide generations of investors to come.
Thanks, Christian. Next, we'll be given an overview of the interest rate risk exposure and how fluctuations affect the company's portfolio. A great place to start is by looking at the U.S. Treasury yield curve, which is currently inverted. This chart was pulled on February 2nd, which is still pretty accurate compared to the February 23rd curve. As you know, the visual representation accounts for the rates on the different U.S. Treasury debts given different maturities. Historically speaking, it's not uncommon to see a recession following an inverted yield curve. Berkshire, as with other companies, has had to strategically manage their assets with the ever-present interest rate risk. Next up, we'll move along to the findings in the company's 10K and 10Q September reports. It was worth mentioning how their investments in the United States and foreign governments with maturities in the next 12 months were a little over $17 billion. As of September, approximately 94% of the foreign government holdings were rated AA or higher by at least one of the major rating agencies. Here, we include some information from their balance sheet, which is broken down between different types of businesses. In one category, we have the insurance and other, followed by railroad, utilities, and energy. Berkshire holds about $31 billion in cash and cash equivalents, about $133 billion in short-term investment U.S. Treasury bills, and about $23 billion in fixed maturity securities. One is able to see how the company is heavily invested in short-term investments directly tied to the interest rates on Treasury debt. Now, to complete the balance sheet, we follow up with the company's liabilities and equity. It's broken down similarly to the assets section of the balance sheet. Once again, it's critical that Berkshire's strategy accounts for the inverted yield curve. As of September 2023, much of the company's notes payable and other borrowings lie within their railroad, utilities, and energy with $83.8 billion. Dividend income declined 12% in the first 9 months of 2023 and 4.5% in the third quarter compared to the dividend income in 2022. Additionally, interest and other income increased to $3.5 billion the first 9 months, along with $1.3 billion in the third month. We won't go into much detail now, but my team member Aldo will address the company's ample liquidity later on in the presentation. On this slide, we provide a visual of how Berkshire Hathaway's quote unquote invest in bonds, loans, or other interest rate sensitive instruments to acquire or originate such instruments at prices considered appropriate relative to the perceived credit risk. They issue debt to fund business operations along with business acquisitions. They also attempt to maintain high credit ratings in order to minimize the cost of their debt, as mentioned earlier.
Berkshire Hathaway's liquid fixed income holdings consist of cash and equivalents, short-term treasury bills maturing within 1 year, and other fixed maturity securities. Collectively, these holdings total over $179 billion and are a source of liquidity for the firm's operating needs and opportunistic investments. This table classifies Berkshire Hathaway's liquid fixed income holdings by estimated average maturity. Approximately 97% of the combined fixed income holdings will mature within 1 year. As a result, the weighted average maturity or duration of Berkshire's fixed income portfolio is very short term at approximately half year or 6 months. Given a change in interest rates, the top table on this slide reflects the expected percentage change in market value of Berkshire's fixed income assets in percentage terms, while the bottom table reflects the expected change in dollar terms. Due to the extremely short average duration of Berkshire's fixed income asset holdings, the portfolio has minimal risk exposure to rising interest rates. This slide presents Berkshire Hathaway's consolidated long-term liabilities totaling approximately $125 billion. Our team estimated the average maturity of Berkshire's consolidated long-term debt based on the company's latest 10Q filing. Based on our analysis, we estimate the duration of Berkshire's long-term consolidated liabilities to be approximately 19.5 years. The long duration of Berkshire's liabilities contrasts sharply with the short duration of the company's fixed income asset holdings. Due to their long duration, the market value of Berkshire's liabilities are expected to decline significantly if interest rates increase from present levels. Any increase in interest rates would present Berkshire with the opportunity to realize significant gains by repurchasing the company's outstanding debt at potentially lower prices in the future. This section depicts the financial valuation of shares of Berkshire Hathaway using comparable-based relative valuation approaches and a discounted cash flow approach. For our comparables-based valuation analysis, we computed the average multiples of comparable companies from industries represented within Berkshire Hathaway. These average industry multiples were then weighted by the percentage of revenue that each industry represents within Berkshire's consolidated revenues. Using the weighted average enterprise value to revenue and enterprise value to EBITDA multiples, our team estimates the fair value of Berkshire Hathaway stock at $577,000 per Class A share as of February 15, 2024. Since the actual stock price on this date was $607,000, Berkshire's stock price is overvalued by approximately 5% relative to our fair value estimate using these multiples. Using an average of the price-to-earnings multiples and price-to-book multiple, our team estimates the fair value of Berkshire stock at $561,000 per Class A share as of February 15th. Since the actual stock price on this date was $607,000, Berkshire's stock price is overvalued by approximately 8% relative to our fair value estimate using these multiples. This slide illustrates the forecast assumptions used by our team to estimate Berkshire's fair value using the discounted cash flow approach. This slide depicts our team's calculation of projected free cash flows for Berkshire Hathaway during the next 5-year period using our forecast assumptions. Based on our DCF model, we estimate the fair value of Berkshire Hathaway stock at $559,000 per Class A share as of February 15th. Since Berkshire's Class A stock was trading at $607,000 on this date, Berkshire's shares are overvalued by approximately 8.5% based on our DCF model. In conclusion, all three valuation approaches indicate that Berkshire's stock price is slightly overvalued between 5 to 8.5%. Berkshire Hathaway's subsidiary company, Clayton Homes, extends credit to borrowers purchasing the company's manufactured homes. This section analyzes Berkshire's mortgage portfolio based on disclosures in the company's most recent 10Q filing. As of September 30th, 2023, Berkshire Hathaway has a mortgage loan portfolio totaling approximately $24 billion, net of allowances for credit losses and unamortized discounts and points. Mortgage rates offered by Clayton Homes are not disclosed in Berkshire's SEC filings or on the company's website. Our team estimates the average mortgage rate to be approximately 8% on manufactured and modular homes based on national average mortgage rates for 15 and 30-year mortgages, plus an additional estimated credit spread for manufactured and modular homes. Berkshire Hathaway does not disclose the average duration of its mortgage portfolio in the company's SEC filings. Our team assumed an average payment period of 15 years for Berkshire's mortgage portfolio in order to prepare this interest rate sensitivity analysis. Our team constructed a forecast model to project Berkshire's mortgage portfolio over the next 10-year period. Our model assumptions include an 8% annual mortgage interest rate, 15-year average mortgage maturity, 25 basis points expected annual prepayment rate, 33 basis points expected annual mortgage default rate, and 10% expected annual growth rate in mortgage originations.
We will now discuss the foreign exchange market. Foreign currency denominated debt. Here we have a table displaying Berkshire Hathaway's current exposure to foreign exchange. As of September 30th, 2023, the company has borrowings in the euro, Japanese yen, and Great British pound. These borrowings include non-US dollar denominated investments totaling 6.85 billion euros, 1.75 billion pounds, and 1.137 billion yen. Berkshire Hathaway's foreign currency investments serve a strategic purpose as they offer diversification as well as financing opportunities. Risks associated with these foreign currency investments include exchange rate volatility, geopolitical risks, and interest rate changes. Interest accrued for each borrowing. Here we decided to make a table to display scenarios in which we see interest rates both increase and decrease in a range from 0.7% to 3%. The highlighted cells depict the current expected interest rate for each currency based off of their weighted average interest rate. This table demonstrates the importance of monitoring interest rate fluctuations as Berkshire Hathaway demonstrates the sensitivity to changes in interest rate. Berkshire Hathaway's current exposure to foreign exchange risk. Despite being a risk, exchange rate fluctuations have actually benefited Berkshire Hathaway. In the third quarter of 2023 alone, these fluctuations contributed pre-tax gains totaling $582 million, with a cumulative amount of $1.1 billion in gains in the first 9 months of the same year. Additionally, in 2022, the company reported notable gains of $1.263 billion from non-U.S. denominated debt, including in net earnings, making a substantial increase from the previous year's $955 million. Geographic sources of revenue. While yes, Berkshire Hathaway does have to consider potential risks with foreign currency exchange and interest rate differentials, we see here on this graphic that they are predominantly operating within the United States as their main source of revenue, meaning changes in foreign currency don't have an overwhelming effect on their overall success.
Berkshire Hathaway and the efficient market hypothesis. Warren Buffett has written extensively within his annual shareholder letters regarding his disagreement with the efficient market hypothesis. His quote on this slide suggests that markets are occasionally inefficient and that investors can profit by taking advantage of these opportunities when they occur. This chart illustrates the cumulative investment performance of $100 invested in Berkshire Hathaway since Warren Buffett acquired the company in 1964 versus $100 invested in the S&P 500 index. As shown in this chart and described in the following pages, the successful long-term investment performance of Berkshire Hathaway cannot be explained by the efficient market hypothesis. This slide summarizes performance statistics for Berkshire Hathaway stock and the S&P 500 index over the same time period. This scatterplot chart of Berkshire Hathaway stock returns versus the S&P 500 index returns shows a high degree of dispersion relative to the index. This slide depicts the results of a two-tailed t-test comparing Berkshire Hathaway stock performance to the S&P 500 index. Because the p-value of 0.01 is less than the 0.05 significance level, we can reject the null hypothesis. In a widely circulated research paper, financial researchers investigated the sources of Warren Buffett's exemplary investment performance. After controlling for various factors, the researchers found that Warren Buffett's investment track record is largely explained by purchasing inexpensive, safe, quality stocks and accessing low-cost financial leverage provided by insurance float. This slide reflects the holdings and percentage weightings of Berkshire Hathaway's common stock portfolio as of December 31st, 2023. Berkshire's top 10 equity holdings represent the overwhelming majority of the company's public equity investment portfolio. Using Berkshire Hathaway's 13F filings, our team constructed a simulated portfolio consisting of the company's top 10 equity holdings. This chart illustrates the cumulative investment performance of $100 invested in Berkshire Hathaway's common stock portfolio versus $100 invested in the S&P 500 index for the most recent 5-year period. The chart clearly shows the outperformance of Berkshire's common stock portfolio versus the S&P 500 index over this period. This slide shows performance statistics for Berkshire Hathaway's common stock portfolio and the S&P 500 index over the most recent 5-year period. This slide shows a scatter plot chart of Berkshire Hathaway's common stock portfolio daily returns versus daily returns for the S&P 500 index over the same period. This slide depicts the results of a two-tailed t-test comparing Berkshire Hathaway's common stock portfolio performance versus the S&P 500 index for the most recent 5-year period. Because the p-value of 0.82 is greater than the 0.05 significance level, we do not reject the null hypothesis and can assume that the two sample means are equal. By rearranging the terms of the Gordon growth model equation, our team computed the implied dividend growth rate for each of Berkshire's common stock holdings.
Banking and the management of financial institutions. Warren Buffett's business principles. At the core of Berkshire Hathaway's success are Warren Buffett's guiding business principles. The company values enduring partnerships, fostering collaboration, and long-term commitment among stakeholders. Buffett advocates for cautious financial practices, emphasizing the avoidance of unnecessary risk and the prudent use of debt to maintain a strong balance sheet. Berkshire measures success not solely by financial metrics, but also by the sustained growth of intrinsic business value per share, prioritizing long-term value creation over short-term gains. The company's investment strategy focuses on owning a diversified portfolio of businesses with strong cash flows and high returns on capital, seizing opportunities in both public and private markets to enhance overall returns. Buffett underscores the importance of retaining excellent businesses regardless of market conditions and leveraging insurance float intelligently through disciplined underwriting. These principles underscore Berkshire Hathaway's commitment to long-term sustainability, prudent financial management, and the creation of enduring shareholder value. Berkshire's capital structure, risk, and liquidity management. Berkshire Hathaway upholds a conservative capital structure, a reflection of Warren Buffett's philosophy emphasizing financial strength, substantial cash reserves, and avoidance of excessive leverage. Liquidity management has great importance in Berkshire's financial strategy, with Buffett underscoring the importance of substantial cash reserves and investments in highly liquid assets like U.S. Treasury bills. This liquidity ensures Berkshire's ability to swiftly capitalize on investment opportunities, navigate economic downturns, and meet short-term cash requirements efficiently. These measures are integral components of Berkshire Hathaway's risk management strategy, ensuring preparedness for any situation. Warren Buffett's investing principles. Here we have highlighted just a few of Buffett's most important criteria when deciding whether or not to invest in a company. We can also see here in this quote a glimpse into his ideology when looking to invest in a business.
Berkshire Hathaway's venture capital and private equity investments. Warren Buffett does not distinguish between acquiring controlling interest in private businesses and purchasing non-controlling interests in publicly traded companies. Over several decades, Berkshire has acquired controlling interests in numerous companies and built a significant common stock portfolio valued at more than $318 billion. Berkshire's recent private and public equity investments include Allegheny Corporation, Pilot Travel Centers, Kraft Heinz, Occidental Petroleum, and Apple.
Here we have our conclusion. Conclusion. After considering each aspect discussed, Berkshire Hathaway emerges as a great example of a financial institution operating at the pinnacle of its capabilities. Berkshire Hathaway's enduring success and approach to business are a reflection of strategies instilled in the company by both Buffett and Munger. We hope you find our presentation informative and interesting and come to similar conclusions about Berkshire Hathaway as we have. Thank you for watching our presentation. We are Group 3, Aldo, Christian, and Maya.